Hey traders, welcome back to the weekly Forex Forecast. Coming up this week, we've got FOMC and non-farm payrolls out of the US, and as a result, you can see the dollar has just consolidated and tightened leading into this week. So the next moves in the dollar are most likely going to be determined by these news events next week. We also have the BOJ and the Bank of England interest rates out of those countries next week. And in today's video, I'm going to show you not just the watch list that I'm personally looking at trading and the setups that I'm looking at trading next week, but also how I'm going to be specifically looking at trading the BOJ and FOMC or non-farm payrolls next week, and the setups I'm going to be looking at after those major news events take place in their respective currencies. Okay, so moving on to the portfolio selection process, and what jumps out at me in the performance metrics is that we have a pooling of the commodity currencies right at the bottom here. This is classic risk off in the Forex complex. And when you have risk off, and we're seeing this with US stocks selling off, commodities underperforming like copper, what happens in risk off is you get the commodity currencies underperforming the EU majors, and you tend to get the EU majors underperforming the safe haven assets like the franc, like the dollar, and like the yen. So I wouldn't be surprised to see the yen pushing higher above the euro in the coming weeks as risk off starts to deepen in the markets and across the board. So coming into this week is pretty easy actually in terms of the portfolio selection process, as we have overall risk off coming into markets. The top shorts that we're going to be looking at in today's video, and also I'm going to be focused on next week, are of course number one, the New Zealand dollar, number two, the Canadian dollar, and don't forget last week we had an interest rate cut out of the Bank of Canada, and I expect the Canadian dollar to continue lower to follow on from the sell-off from last week, this week. And also the Australian dollar, which has been one of the best performing currencies to the upside. We've been looking at it to the long side in the performance metrics whilst we had that kind of stagflation or inflation regime. But now we're seeing the Australian dollar underperforming, and we're seeing this risk off coming into markets. So those are the three currencies in that order that I'm looking at to the short side. And I want to pair them, obviously, with what we've just been discussing earlier. I want to pair them with the risk off currency. So I want to be looking at Swiss franc to the upside, the US dollar to the upside, and also the yen to the upside. You can look at EurUsd, EuroCAD, Euro New Zealand, but in today's video, we're going to focus on the Swiss franc, the US dollar, and the yen to the long side versus primarily the commodity currencies. So specifically going to be looking at New Zealand franc, New Zealand dollar to the downside, New Zealand yen to the downside. We're going to look at CAD franc to the downside, US dollar CAD to the upside. And we're also going to be looking at Aussie dollar to the downside. And we're also going to be looking at Aussie franc to the downside, Aussie dollar, of course, and Aussie yen to the downside as well. Okay, so kicking off the watch list as we always do with crude oil, and my directional bias in this is to the downside. I can either be short in crude oil or do nothing. I cannot buy crude oil next week. And so really there are two main areas that I'm going to be looking for, and you'll see this repeated for those of you who are new throughout the video. If we can breach the blue level, we have roughly a 70% chance of pausing or reversing back inside this range. And if we break out, that 3 out of 10 chance we break out and we test and breach the gold level, there is roughly a 9 out of 10 chance of this reversing back inside by the end of the week. So if we can pull back, what I'm going to be looking for is I'm going to be looking for a breach of the 79.95. This is the area where I execute most of my initial positions with members throughout the week in real time. And this is going to be the opportunity I'm looking for. So a pullback, a breach of the 79.95, and I'm going to be looking at fading that to the downside for 1 or 2 day reversal in crude oil. The second area I'll look for, of course, is, as I said, the gold level. So if we breach this, I may already be short, and then I have to risk manage that position. But if we breach this and we take out the 8269, this will be the second place I would be looking for a 1 or 2 day reversal to the downside in crude oil. And the final thing you can look for is if you get a fast market and we're pulling back, but we don't test this level and you get a breakout intra-week, you can look for that bear flag setup down to the 74.46 in this case. And once you start to break below this, generally speaking, again, this is a good profit taking opportunity because you have a 7 out of 10 chance roughly of pausing or reversing higher by the end of the week. So the first Forex pair we're going to look at is New Zealand franc. Huge sell-off to the downside. I can either be a seller or do nothing. I cannot buy this market next week. So what I'll be looking for is I'll be looking for a pullback and a breach of 0.52620. This will be the first place. If we can break above this level, I'll be starting to look for a 1 or 2 day reversal to the downside. If we break through here and we test the 0.5321 and we start to break above it, this is the second place next week. I'll be looking for a near-term short for 1 or 2 days. Whether or not I'm already short, this will be the second place. Sometimes I don't get involved here. It pushes up here and I short it initially. And other times it will take out the upper bound first, of course. I'll short it, it will move against me, and I'll use that just to risk manage the initial losing position. But those are the two opportunities I'm primarily going to be looking for next week. If we start to break out intra-week, you can look for that bear flag set up down into the 0.51440 as well. Next is New Zealand dollar. Now, of course, we have FOMC on the Wednesday. So I'm going to be looking at trading this primarily post FOMC on Wednesday. If we get a move up on the Monday, you can look at maybe fading this from the first upper bound, leading into Wednesday, because generally speaking, any initial moves at the beginning of the week in an interest rate decision week, they tend to hold. They don't tend to see big direction. So actually that would be a good pre-FOMC opportunity. However, what's most likely to happen is that this market does nothing. And then on FOMC, we're going to basically see one of two things. Either we have a neutral outcome where not really much happens, in which case I will be looking for that breach of the 0.5959. I'm going to be looking at 1 or 2 day reversal to the downside in this market. I can either be short or do nothing. I cannot buy this next week, so it's only short opportunities I'm looking for. The next thing we could see is we could see a very weak reaction from the US dollar. Now, if that's the case and this blasts through the 0.5959 for whatever reason and tests the second upper bound, this would be where I'd be looking at fading that opportunity to the downside. If we get a very, very bearish dollar and it breaks through the upper bound here and tests all the way up here. And again, if you get a very bearish outcome, maybe you want to filter that initial short, right? And it blasts through. Sometimes it happens very quickly, and then it tends to fade at the second upper bound. And the third thing you can look for is, of course, the third outcome being a stronger US dollar. And in that case, what you can see is the market just kind of correcting into FOMC, and then you get that kind of momentum sell-off, don't you, on the interest rate decision, and then a pullback and a follow-through bear flag into the 0.5817. So that's the three ways I'll be looking at playing New Zealand dollar after FOMC next week. Next is euro dollar. Now, like crude oil, gold, and silver, we cover euro dollar every single week. So I don't think this is one of the best setups next week, because we've seen in the performance metrics, both the euro and the dollar are quite strong. However, we do have FOMC, and on balance, I would prefer to be short or doing nothing in euro dollar because of the risk off regime coming into markets currently. So heading into next week, what I'll be looking for is if we get a neutral response from FOMC and we trade into the 1.0928 and maybe take out this high, I would be interested potentially, although I think there are better setups that we're looking at in today's video, I would be potentially interested in a 1 or 2 day reversal to the downside, short opportunity above that level. If we break through here, whether I'm short or not, and we breach the 1.1000, this would be the second place I'd be interested in a short position next week in euro dollar. And that's probably, that would probably come from a very weak outcome in the dollar, right, after FOMC. So a very weak outcome in FOMC. The US dollar sells off, euro dollar rallies into the second upper bound. That's where I'd be looking to fade that. And as always, if we get that blast higher in the US dollar from FOMC, you have that third option where you break out. You kind of pull back because it's unlikely to do anything in the build up to FOMC. You get that initial move on FOMC, and then you get the follow through kind of bear flag in this case down to the 1.0783. Next is New Zealand yen. Now, we've had a monster sell-off in New Zealand yen and all of the yen pairs. We're seeing the yen carry trade unwind. This much is clear. This is the real deal versus previous attempts at intervention, everything else. So what I'm going to be looking for, preferably after the BOJ meeting next week, is very similar to what we just discussed with FOMC. So if we get a neutral outcome, what I'd like to see is New Zealand yen pulling back, breaching the 91.99, and this is going to be the place I'm going to start to look for a 1 or 2 day reversal to the downside. If for whatever reason we get a snapback of this, we get a kind of short covering rally and we push through this with momentum because we get a weak yen post BOJ, I'm still only going to be looking at shorting. I'm not going to be looking at going long just because we get a weak yen from the BOJ. So in that situation, if we blast higher on a bearish catalyst for the yen, I'm going to be looking at fading that from the 93.45. And as always, if you get that kind of strengthening of the yen, we just kind of consolidate into BOJ, and then you get the strengthening, you can look for that bear flag, follow through trade into the 89.07. And none of this is theory, guys. This is what we're doing every single week in real time. Next is CAD franc. Really nice momentum breakout from this kind of pennant pattern, and you can see very strong momentum precedes price. This is telling us the direction of travel here, just technically, although we know we're looking to the short side with the portfolio selection process. But technically, this confirms our portfolio selection process. And actually, that's the way you want to be trading. You want to have a portfolio selection process, and then you want your technicals to align with that and basically give you the patterns, the tradable setups. So what we're seeing here is really nice momentum sell-off, and any consolidation pullback is viewed as an opportunity to look for a short above the 0.6439 next week, and preferably for 1 or 2 days to the downside. Now, because we've got this strong momentum, there's a very good chance we're coming back down to the low. So actually, you could hold this for a swing trade as well. But generally speaking, I'm looking to capture 1 to 2 days worth of movement in these markets each week. If we break through here, which is unlikely, but if we do break through here for whatever reason and test the 0.64910, whether or not I'm already short, this will be the second place I'd be looking for a short position next week. If I am already short, I'll probably just be cost averaging this and get out of that initial losing trade. But if I'm not, if it blasts through here and I haven't shorted here, this would definitely be a good initial position for a reversal for 1 or 2 days next week. And finally, if we break out intra-week before testing the first upper bound, you can look for that pullback, bear flag, sell-off into the prior low at the 0.6336. And just remember, there's a very good chance we get continued weakness in the Canadian dollar over the next few weeks after seeing the Bank of Canada cutting interest rates last week. Next is US dollar CAD. Now, the first thing I want to do is I want to zoom out here. You can see we're zoomed out, so you can see this previous consolidation. We come down, we fail at the low, and then we bounce from this low, and we have this rally to the upside. And all of this is one move. So what we're looking at here is a consolidation with a potential one wave breakout for those of you who like your wave counts. So what follows a one wave? Well, correction, usually a second wave. And the reason that's important is because if we come down and we start to breach the 1.3751 or a little bit lower, this is most likely going to be a corrective wave before a much bigger third wave breakout above the prior high and out of the prior highs of the correction as well. Now, this aligns with an overall shift in risk off, because as the VIX rises, so too does US dollar CAD rise. They're correlated. So US dollar CAD as a currency pair is telling us there's a very good chance we're likely going into a higher volatility regime. And we can see that just by looking at the VIX. So coming into next week, we do of course have FOMC, so I expect this market to do pretty much nothing into FOMC. If we have a neutral outcome, I'm just going to be looking for the standard setup, a pullback, a retest of the prior high in this case, which is really nice. We break out, we break the prior high, and we have the lower bound sitting right here. So a break of the 1.3751, I'm going to be looking at a buying opportunity in US dollar CAD. For a short-term trade, 1 or 2 day reversal to the upside, but if this is a second wave and this is a one wave, you could also consider, although if you hold trades for longer periods of time, your win rate goes down. But you could also consider potential swing trade and even a breakout for a third wave. If we breach this and let's say we get a very weak US dollar for whatever reason, and the market comes all the way down to the 1.3662, whether I'm already long or not, this would be the second place I'd be looking at jumping in for a potential long opportunity to the upside. And again, you could still treat this as a potential second wave, just a deeper one. And the final thing you can look for is if we start to correct and for whatever reason we get a stronger dollar and you see that momentum break like you often do on interest rate decisions, and then you get the flag, in this case the bull flag, into the 1.3921. Next is CAD Yen. Again, I can either short this or do nothing. Buying this is not an option, and we have this big sell-off. We're starting to correct already. I do think this needs to pause. Most likely, in my opinion, we do come back and breach the upper bound and have a really nice low over here. That's a great place to start to look for a breach of the upper bound next week, trade into this low, and then start to look for a 1 or 2 day reversal. And I like to drop down to the lower time frames, look for momentum to stall out, look for those reversal patterns on lower time frames, and that's when you get those 1 or 2 day sell-offs. And if we breach this and we break through here, and remember, you're only going to do this with a 30% expectancy. Most of the time, you're not going to test these gold levels. But if you do, if you breach this, whether I'm already short or not, this is going to be the second place that you can look for a 1 or 2 day reversal to the downside. And this is the second place I'll be looking for a short opportunity next week. And as always, if we do get a fast market, although I do think there's a very good chance we breach the upper bound next week because of how overcrowded this is to the downside, you can look for that sell-off, that pullback, and that kind of bear flag into the 109.56. And as I say many times in this video, usually in the 4 hours, you tend to get, if you get these bear flags or bull flags, you tend to get one within the week. Moving on to the Aussie pairs then, before we look at gold and silver. And again, you've got this massive sell-off, very, very overcrowded to the downside, needs to pause, needs to correct. So what I'll be looking for is a pullback and a breach of the 0.5850. And again, really nice low over here where we can break this low. We can pull back, become overbought on the week, test the underside. And in this area, I'll be looking for that 1 or 2 day reversal to the downside. If we blast through here, which I think is unlikely, but in the event we do, for whatever reason, the 0.5915 is the second place. I'll be looking for a short-term short opportunity in this asset. Whether I'm short or not here is irrelevant. I will be looking for a second position over here. And finally, if we just get that fast market and we start to pull back, we flag, we fail to breach the upper bound. Instead, you get momentum coming in the other direction. You can look for that bear flag setup into the prior low and into the 0.5721. Next is Aussie dollar. I can either short or do nothing. Buying this, whatever happens next week, is not an option for me. And of course, we have FOMC. So again, just like the other dollar pairs, I'm going to be looking for a neutral outcome of FOMC. If it passes uneventfully, I'm going to be looking at shorts above the 0.6626. Again, really nice prior kind of bottom of this consolidation here. We break down below it, we pull back, we become overbought above this level, and then we start to test the underside over here. This is going to be a good place to look for continuation lower for 1 or 2 days on a short-term basis, and potentially even that second wave in a swing trade for a longer period of time, depending on how you like to trade these. By short-term, looking for 1 or 2 days to the downside next week. If we blast through here, which is unlikely unless we get a very weak US dollar from FOMC, but if we do get that reactively, I'd be looking at the 0.6703, whether I'm short already with an initial position here or not. And the third thing, of course, is if we just consolidate and then we get the momentum off of FOMC. So this would be a bullish outcome for the dollar. We start to see the Aussie sell off. You get that kind of bear flag set up and follow through into the 0.6471. And the final Aussie pair out of the Forex complex before we move on to gold and silver is Aussie Yen. Now, Aussie Yen is the benchmark risk on, risk off currency pair. Why? Because out of the majors, the Australian dollar is the most risk on and the Japanese yen is the most risk off. So what we're looking at here is we're looking at with the yen carry trade unwinding, especially with Aussie Yen tanking, this is indicative of general risk-off regime coming into the picture. So any pullback in this market, I can either be a seller or do nothing. I cannot buy this market next week. A breach of the 102.29, especially if we can come back and test this low, this is going to be a great place to look for momentum to fade and for a 1 or 2 day reversal to the downside. And again, you could very well see this swing trading all the way down to the low, and certainly into the lower bound over the next couple of weeks. But on a short-term basis, that's what I'm looking at first and foremost. If we breach this for whatever reason, that 30% chance of kind of breaching and coming all the way up to here, this is the second place I'd be looking for a 1 or 2 day reversal in Aussie Yen, whether I'm already short or not. And the final thing I'm going to be looking for, and you can look for this kind of intra-week breakout, and I much prefer fading these moves. That's what we do each week with members in the GMT members area. But you can also look for those breakout trades when you get fast markets, that kind of bear flag into the 99.04. Okay, so wrapping up the video with gold and silver. Now, because I have a bullish bias in the dollar, I do favor very, very near term short positions in gold and silver. However, gold is actually pretty strong. It's one of the strongest and best outperforming commodities. So I don't think short gold is a fantastic opportunity, but we do cover gold every single week. And so on balance, because of that bullish bias in the dollar, like I said, I do prefer shorts. But I prefer shorts in silver as opposed to gold next week. I think silver is a better short opportunity. So any pullback in gold, if we do breach the prior high and we start to break through the 243,278, you can look for a potential 1 or 2 day sell-off to the downside. If we blast through here and we take out the prior high and the second upper bound, this gold level at the 2478.49, this is the second place. You have a high probability of a 1 or 2 day reversal to the downside. And again, if you break out intra-week, you can look for those kind of bear flag patterns into the 231.35. Again, we cover gold every week, so I don't think this is one of the best opportunities next week personally. And if you are going to short gold or silver, I think silver is the better short next week. And last but not least, we have silver. Really nice momentum to the downside, big kind of 4-5% down day, and we've broken the prior low. So what I'd really like to see here is this is where you can get your kind of Fibonacci set up for those of you who like to trade that way. But any pullback in this market, if we can breach the 28.93, this is going to be a great place I'm going to be looking at trading. You can see really significant prior lows over here. You know, we could push through them on a bit of volatility, breach the 28.93, and I'm going to be looking for 1 or 2 days down in silver. And actually, again, because of the technical pattern here, we could very easily see a swing trade where this comes lower over the next few weeks. So that's what I'm going to be looking for primarily. If we break through here, I think it's unlikely, but if we do break through here, I will be looking for a second potential short position at the 29.93, whether I'm short here or not. And finally, if we break through without testing the upper bound, you can look for that momentum and bear flag set up into the 26.93. But I can either sell silver next week or do nothing. I cannot buy this asset next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.